In my experience, and I don't know why it is, gold is the first mover. But when the precious metals narrative becomes established by gold, uh, and the generalist money begins to come into the precious metal space, because the population of silver stocks is so small, and because the price movements that are exhibited by the commodities that they produce is so great, the upside in silver stocks is simply mind-boggling when it occurs.
Mhm.
If we head into a precious metals bull market in 2024, note that I said if, not when.
Renowned resource investor Rick Rule shares his insights on the dynamics of gold and silver markets. According to Rule, gold typically takes the lead in establishing the precious metals narrative, attracting generalist money. However, when the broader market enters the precious metal space, silver, with its lower unit value, tends to outpace gold in both movement and magnitude. Rule anticipates a potential precious metals bull market in 2024, emphasizing the extraordinary upside in silver stocks. He also warns of the challenges, predicting a surge in new silver companies, some genuine and others questionable, as witnessed in past sectors. Additionally, Rule discusses the historical trend of governments, particularly the US and Canada, employing subtle tactics like taxation to indirectly nationalize valuable resource industries during periods of escalating commodity prices, hinting at potential challenges in the silver market. Let's dive into the video to hear his full thesis.
What will happen is that precious metals bull market will absolutely, positively be led by gold. I don't know why this is. I just know that it always is. And when the generalist money is attracted by the precious metals narrative, silver, perhaps because of its lower unit of exchange, unit value, will move further and will move faster. And the silver equities, which we've discussed many times before, don't have the market cap to contain all of the generalist money that will come in the space.
Mhm.
There will be lots of newly minted silver companies, so-called silver companies in quotes, companies that failed as marijuana companies, and then they failed as lithium companies. Perhaps they had some dalliance in medical technology along the way. The lame, the halt, and the blind. There will be lots of those. And some of those, like many successful scams, will do okay in the market. But what I'm talking about are the real silver companies. The companies that actually discover and develop economic deposits that produce silver at a profit, that will deliver real economic value in the face of price escalations in silver. Those are the ones that I'm talking about. The ones that have less downside, perhaps a little bit less upside than the flagrant scams, but certainly where the juxtaposition of risk to reward is more sane. I lived through the decade of the 70s, and during a period of rapid escalation in commodity prices, governments were caught flat-footed. They didn't believe in the value of their own resource legacy. After, ironically, the resource prices had peaked in the latter part of the 1970s, the early part of the 1980s, the countries got around to nationalizing them. In other words, stealing them.
Mhm.
And I think that you'll see that this time. Certainly Mexico, as an example, didn't develop its oil industry itself. It allowed people who knew what they were doing to develop the oil industry. When the oil industry had value to steal, of course, the Mexican government stole it.
Mhm.
Governments aren't very smart, but they are smart enough not to steal something that doesn't generate them any immediate disposable income. And I suspect that if you saw the silver price go to 75 or 80 nominal US dollars per ounce, that there would be a trend toward nationalization. I don't know that the nationalization anymore will be overt, that they will steal it the way the Mexican government stole the oil industry.
Mhm.
What I suspect will happen, and I think it'll happen in the United States too, is that there will be direct and indirect taxation, that they will steal the industry on the installment plan, that they will put in place a severance payment on top of tax, that they will put in place a super profits tax or excess profits tax, like the US and Canadian governments did in the oil and gas industry. Remember that the real specialists at nationalization haven't been the Mexicans or the Venezuelans. They're pretty clumsy. The real cynical masterminds of nationalization have been the United States and Canada and the EU, the subtle politicians who steal on a gradualist basis. The people who say, yes, there's an income tax, there's a severance tax, there's a payroll tax, there's a royalty, but we also want you to set aside money for the community. And by the way, we will determine who the community is and how it gets spent.
Rick Rule provides a cautionary perspective on government involvement in financial matters, emphasizing their ability to indirectly impact citizens through taxation rather than direct theft. He points out that governments won't necessarily repeat historical mistakes of outright nationalization, but may opt for subtler methods, such as adjusting marginal tax rates. Rule warns that these changes can be popular if they target the investing class, making it seem like the government is only affecting a specific group. His insights shed light on the potential strategies governments may employ to navigate economic challenges without resorting to overt measures.
Governments don't have to involve themselves in direct, honest theft. People have asked me for years, will the government nationalize my IRA? No, they'll change the marginal tax rate on the distribution from your IRA. In other words, they will steal from you in a sort of an elliptical fashion. They will not, I think, repeat the mistakes of the Roosevelt era, where they came in really truly as jackbooted thugs. They don't need to do that anymore. If they raise marginal tax rates, particularly if they raise marginal tax rates on the investing class, which is to say that class of people which can afford to pay them, it becomes very popular. If the Department of National Revenue in Canada went to nationalize PSLV, or if they went to nationalize RRSPs, as an example, Canadians across the length and breadth of the country, when they were stolen from directly, would be very, very, very angry. But the Trudeau government has proven that if you raise marginal tax rates, if you tax indirectly, if you tax in places where people don't see it, as an example, in heating oil or gasoline, that you can get away with an awful lot. And in fact, you can be very, very, very popular because the perception among taxpayers is that the government is screwing somebody else, not them. The reality is very different. But of course, screwing other people is why democracy works.
In today's insightful discussion with Rick Rule, we explored the dynamics of precious metals, particularly gold and silver, in the context of potential market trends and government interventions. Rick shared valuable perspectives on the unique role of gold as a first mover and the potential for a bull market in precious metals. He also delved into the challenges and possibilities that silver stocks may face, shedding light on the risks and rewards in this sector. Furthermore, Rick touched on the historical context of government actions, particularly nationalization, and provided a cautionary outlook on potential indirect methods governments might employ to influence the precious metals industry. As we navigate the complexities of these financial landscapes, understanding the nuances of taxation and government policies becomes crucial. We hope you found today's discussion enlightening. If you enjoyed this content, don't forget to subscribe, like the video, and share your thoughts in the comments below.